Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 21st of July. ECB meeting. What to expect? The highlight of the day will be the ECB policy meeting. Although the bank is widely expected to hold off on any new stimulus measures or rate cuts, there has been speculation recently that it could tweak its bond buying program. This includes raising the limit of how much of corporate non-bank assets it can buy and perhaps broadening the universe of eligible assets in case of a shortage of papers. The fact that the bank's TLTRO2 operations and the corporate bonds purchasing program were implemented in June, though, enhances the case for officials to be patient for now. In the aftermath of the UK vote, the bloc's 5-year inflation expectations plunged to a new all-time low level. They currently stand at levels lower than those in March, when the bank unleashed its aggressive salvo of easing measures. We therefore expect the combination of Brexit uncertainties and the latest decline in 5-year inflation expectations to prompt ECB officials into action, albeit not immediately. Recent comments by ECB Vice President Vitor Constancio that the bank has to wait a little bit to see how Brexit is going to affect the Eurozone before assessing whether further stimulus is needed most likely represent the general consensus of the board. The reaction in Euro at this meeting is highly ambiguous, with a dovish statement alongside hints of further rate cuts needed to weaken the Euro at this level, in our view. The British pound added to its strong jobs report gains after a survey from the Bank of England showed a less downbeat tone among UK businesses than other reports. The survey found that most of the companies asked after the vote did not plan to cut hiring or investment. Also, no clear evidence was found of a sharp Brexit broad economic slowdown. In addition, Bank of England member Christine Forbes said that the bank should not rush into a decision to cut interest rates, echoing recent remarks by another MPC member, Martin Wheal, that further evidence of the vote impact is needed before moving on rates. In our view, the focus remains on tomorrow's preliminary PMI data for July, which will be the first set of data that will reflect the post-referendum era and will probably set the tone for sterling's near-term bias. Overnight, the Reserve Bank of New Zealand issued a brief update on its economic assessment because of a longer than usual period between policy decisions. In this unscheduled economic outlook update, the bank noted that the higher than previously expected trade-weighted exchange rate is holding down tradable goods inflation. This makes it difficult for the bank to meet its inflation objective, and a decline in exchange rate is needed. Policymakers concluded that at this stage further policy easing will be required. New Zealand dollar US dollar dropped on the news, falling below 0.70. Given that it is almost certain that the bank will cut rates at its next policy meeting, we would expect the New Zealand dollar to remain under selling interest. As for today's indicators, we get the UK retail sales for June, and expectations are for both headline and core sales to have fallen. We are not surprised by the forecasts, as it looks more than normal for spending decisions to be delayed a few days ahead of the UK membership referendum. And declining retail sales may cause the pound to reverse some of its Wednesday's gains made following the solid employment report for May. In the US, initial jobless claims for the week ended on the 15th of July are forecast to have risen to 265,000 from 254,000 previously, but this will leave the 4-week moving average more or less unchanged. Existing home sales are forecast to have declined in June, but the fact that housing starts and the more forward-looking building permits improved during the month leaves little room for questioning the US housing market. The Philly Fed Business Activity Index for July is also coming out. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.